Hey everybody, it's Pete. Welcome to today's Best Stock Picks. We're going to be creating a game plan to trade on Wednesday, April 15th, 2020. Got the follow through we expected today. Some stocks gapped up that were harder to trade, a little bit frustrating. We're going to get into a couple of those. We also had some really nice follow through in quite a few stocks on the list. I want to thank Wei for calling out AMD and NEM, which ironically I had in my game plan, but for some reason I didn't read them in this morning's video for the stock picks. So thank you. We're going to take a look at those as well. They followed through really nice. Today was a good day to trade. It was a good day to be active. There were plenty of opportunities today. Definitely a couple of frustrating trades that looked like they were going to go like gangbusters. For example, the financials that had some earnings today, JP Morgan specifically we'll take a look at. And after the gap up, looked like it was all good to go, breaking out to new levels, and completely reversed. No other way to put it. So what I want to talk about just briefly, though, why we were looking to be bullish today, why we were looking on the long side. It's so interesting when you're in the business long enough, and I hate to use this word because it's not teachable, but you start to get a feel that something doesn't smell right. And the only way you can tell that, again, very similar to driving, you have enough experience, you're like, something's going on here, right? We should have sold off. Everybody was expecting us to retrace to the lows. Whether it's the stimulus package or whatever reason you want to use at this point, you have to pay attention to your tape reading skills and just pay attention to the fact that we're going higher. Until we're not going higher, there's not a good reason to look for sell shorts unless those stocks are already weak and the market reverses. So remember, if we're going to have if-then scenarios, the best stocks in the current environment, which just sounds crazy compared to what's going on in the world and where we were just 2 weeks ago, it's hard to find good short sales right now, which is good, obviously, for being a bull and for seeing stocks and hopefully some people's 401ks, bouncing back to levels where they're not panicking at this point. But the point that I want to stress and the point I want to get across here in the beginning of the video is the better you get at reading the tape, the better you get at putting together an argument, the better you get at understanding what your A-plus trade is and what's probably going to happen next, it becomes much easier to be consistent. And remember, the consistency first starts with how you look at the market and executing it on a day in and day out basis. You could sit in an experienced trader's desk with them and not make what they make because you don't have that experience. So our job together is to get you to the point where you believe in the structure, you believe in tape reading, you believe in what you see, very important, and then you execute it because you believe it's the right thing to do. And here's the thing. When you first start trading, it's hard to have that belief because you don't have a track record yet. And a common story that I tell when I first started trading, the first year back in 2000, I was trying something new every month. And at the end of a year, I thought I had a year's experience, but I honestly didn't. I had 12 different 1 month experiences that were all over the place. So hopefully through these videos and through the community and feedback, and for those of you in the coaching program and everything like that, we can help you refine what you're looking at to have the discipline to say, I don't see anything today, or I see a lot of good setups today. And believe it or not, the first thing that I said, I don't see anything today, when a coaching student tells me that, or somebody who's been through the program, and they tell me they're having a hard time seeing something, which kind of what I said before about today's short sales, that's how I know somebody is taking it seriously and finally getting to a point where I know they're this close to turning the corner to become profitable. Because you can't say, I don't see any good setups, unless you know what a good setup is. That's so important, I can't even get it across. So that's why I always start out with, let's look at the setups first, let's put the pieces together first, and then from there we look at some good trades. So we're going to go to the charts now. I want to thank everybody who's commenting, leaving feedback, and liking and subscribing. That means a lot to me. I'm getting some really nice comments from everybody about they like the video, so thank you so much for that, and keep it coming. That means a lot to me. So we're going to go straight into the charts. We're going to set up a game plan for tomorrow, for Wednesday, April 15th. We're going to start out with the weekly chart of the SPY, again, because I usually watch the S&P 500. To me, it's just a broader section of the market. So we called the change of trend over here on the daily chart. Actually, let me go back to that. In this spot here, when we finally closed above this longer term bearish order flow from what's going on in the entire world right now. I don't even want to say the word. But this right here is where we actually got a confirmed change of trend. And then we came into the week saying, at this point here, we're well bid. Yesterday, we closed below the open, but we were very clear coming into today that if the market trades back above the open, which it did, that's why this weekly candlestick is green, that's going to take us back into well bid territory again. So now we have 2 weeks in a row of well bid price action. So my point is, that is what's happening. We shouldn't fight what's happening. If you do, it's going to be very frustrating for you to get to the other side to be profitable. So again, we don't have an opinion. We read the tape and then we go into the day saying, I'd rather be long or I'd rather be short. In this case, the argument is to be long. The argument is to be a buyer and look for spots to buy. So I want to first touch on 2 trades. One of them incredibly frustrating. The other one could have been incredibly frustrating. MRNA, this is going out to Peter out in Greece. We happen to have the same name. So looking at the stock, we clearly we're looking for continuation of movement to the upside. It's all over the place from a longer term perspective. But one thing I do like about it is the size of the bodies of the candles from day to day. Well, when it does pick a direction, it tends to have a large green or a large red candle, which is opportunity intraday. And usually those are the kind of trades that they're a little bit less stressful. I don't want to say easier, and I'll explain why in just a second. But I want to say they're a little less stressful because when the trade follows through, it's easier to manage. Not easier to make money, easier to manage. So I guess the point I want to bring up here is Peter took a couple of these entries, and we'll get down to the to this shorter time frame with a 5-minute chart. And you can see why. You know, obviously, here's the first opening 5-minute candle, and we break out of the opening range here. So if you're a student, you know that the opening range breakout is one of our top plays, right? So you end up taking this trade. The problem comes in is if you miss the first trade and then you're looking for the next one, and taking this next pullback after a breakout and clearing some previous levels, which was yesterday's high, that's absolutely the right trade. If you put the trade on, though, it pulls back and you start getting all this difficult price action where you're not getting follow through, you're going to feel like you're getting beat up and you start to lose your confidence. So this is definitely a trade. I'm making a point here. This is definitely a trade that was a good opportunity, but the stock became a little bit tough to trade. And if you were involved in it like Peter was today and you got slapped around a little bit, I'm going to give you some tough love. And it really comes down to this. You have to use your losing trades, losing days, losing weeks, losing months, however they unfold. It's imperative that you use them as lessons and you use them as feedback. And in this particular situation, if we were trading in my trading floor together, the first thing I would say to you is, are you day trading the stock or are you swing trading the stock? Because there's 2 completely different scenarios in how the stock trades. And here's the key. If you're not trading well, is this an A+ setup? Because if you're not trading well and you don't feel like you're in a good groove and you don't have a read on the market, the only way to get out of a slump is to ignore opportunities that look like this. That's clearly not a beautiful picture. It's clearly an uptrend, clearly active. That is not, oh my gosh, I definitely want to be a buyer because it's so obvious. This thing is all over the place. So Peter, basically what I'm saying to you is, I understand why you traded it. I understand that it is an opportunity, but if you're not feeling it, you're not in a groove, and you want to get you get your groove back, pick stocks that are a little bit more obvious where the trend of the order flow is pushing and pausing, pushing and pausing. That's the easiest way to explain it. We're not seeing that here in an orderly manner. Okay, so I just wanted to point that out because Peter, you're very disciplined with how you normally trade, and if I can help lift you up a little bit from across the world, hopefully I did that today. All right, so again, use it as a lesson. Don't let it get you down. Use it as feedback on how to improve and maybe pick some better trades. So we're going to start getting into some new longs right now. This actually came up in my scans today, and again, you can see too many melted candles here to really love the trade. But this is very similar to what we were taking. John Williams called that Uber today. I'm going to take a look at that in a second. But what I love the breakout. I like the gap. I love the fact that we finally got above 38. Here's what I don't like and what I would say to keep an eye on tomorrow. I wouldn't be placing a buy stop in this because it got up to once, twice, 3 times and basically pulled back in all 3 times when it got above this level, which in this case here to me is 38. I don't look at these wicks if you happen to be new. I'm really looking at the price that's having a hard time holding. And in this case here, it's 38, which that's a big lesson there, by the way. So many chart books, all the way up here is the resistance. That's the price you're supposed to look at. Bull. This is the price that's having a hard time. 38 is the level, okay? So I like the fact that it broke out. I like the push, the pause, the push. Probably going to pause now before we take off again. If indeed it does take off again, we might fail again. Keep an eye on this tomorrow. See how it's trading. See if it's trading above the opening price, because here's what we have on the weekly candlesticks. Looks a little better on the weeklies, right? So you might want to swing trade this and not day trade it, looking for that next bigger move. So you can see we have an inside week, well bid, well bid. Actually, it's still an inside week here. So inside week, well bid, approaching the highs. So a little bit different picture there. I pulled it up and put it in the list because it has potential to be a good trade, but I want to see it stay above this level first before I get involved. I want to talk about probably what was the trade of the day, but was also a little bit frustrating. This was the cover story today, so to speak, in the game plan for this morning. Loved it if it opened flat and stayed above the previous close, which it did right out of the gate. But here's where it got a little bit frustrating for some traders. Look at this opening price action here. So you say, like, where did I get involved? Well, the first thing I want to point out is that we only wanted to be long the stock coming into today. And then if the stock is trading and it's not clean like this, where you're getting wicks in both directions, that's where we'll trade an opening range breakout and wait for a little bit more clean price action. So this is the high of the opening range. This is the low of the opening range. And we really don't get out of it until this candlestick here. So if you took this buy signal or a buy stop above this price, you actually had it move in your favor quickly. But again, think about what's happening here. We're talking about waiting until 10:25, 55 minutes after the market opens. Is that hard to do? Hell no. If it's not trading well, you leave it alone. Find a good trade. If it's not outside of that inside window for the first hour or even the first half hour, don't trade it. Nobody else is. But the point is here, you get involved on this breakout on a buy stop outside of the opening range, pulls all the way back. You're not stopped out because it didn't even come back to your entry price, first of all. But then you see price action gets a little bit weird, but you get another entry right here. You pull back, inside candlestick breakout, and this was really the trade of the day. This one here, because this one was a little bit bouncy. So anyway, my point is this. We had a good trade going into the day, a clear entry, a clear setup, and a clear reason to want to be long. The tricky part of this trade and the MRNA trade was when you got involved. This was a much better opportunity than MRNA for all the reasons we've been discussing, the consolidation breakout from 2018. But this is an opportunity where holding to the close, holding late into the day, really could have made your week, depending on how you manage the position. Now, the 5-minute charts, a lot of people watching this might be swing traders and say, what are you doing looking at a 5-minute chart? Well, a lot of active traders do, and you can see the chart's not as messy on the 15. So I know a lot of traders that'll drop all the way down, even lower time frames, if the time frame they're watching is not trading clean so that they can find an entry. I actually do the opposite. I go to the higher time frame and it becomes a little bit cleaner, and you can kind of see there. And that same inside candlestick that we saw on the 5-minute chart formed around the same time on the 15 to give us a nice entry. And what's really, really cool about this is you could take a look here. You got 1, 2, 3, 4, 5 well bid candlesticks in a row on the 15-minute chart. So again, well bid, covered that in the video this morning in Stocks for Breakfast. Get a nice clean push. You get a bearish U-turn here on the 15, despite it being well bid as well. Your spider sense goes off. You say, okay, bearish U-turn into an inside candlestick closing on the lows in that 15-minute chart. Now it's time for me to move up my stop loss on that trade. So congratulations to everybody who emailed me today that participated in this one. It was really, really nice. 2 more that were called out today by Way. He called out AMD, called me out on it. And I'm telling you, I had it in my list. I just had a brain fart, didn't call it. Really nice trade here. And again, if we look at the shorter time frames, really clean intraday price action. And this was actually something that somebody else had talked about today in the coaching was, I have you in the back of my head now when I'm in a winning trade, not to get out of it just because of my P&L. And this is a good argument for that in favor of that if you're trading your profit and loss and just want to take a profit because it reaches a certain dollar amount, versus you look at the stock and you say, there's no reason to get out other than I want to book the profit. This is what separates somebody who makes bigger, consistent money from somebody who's grinding it out and feels like they could never get it. You have to ask yourself that question. Do I want to get out because I just want to book the profit before it disappears, or do I want to hold the trade because there's absolutely no reason for me to get out other than I'm nervous? So again, good example here in that as well. So AMD was one of those. I'm going to call out a couple of other stocks that meet our criteria right now. So MNST, again, if we look at the daily charts as well, really clean breakout. Look at that, really nice, good trade, 60 to 64. Perfect, and we're looking for the same exact opportunity tomorrow. And again, similar opportunity we talked about in Netflix today. I want to see it trading above yesterday's high and yesterday's close to look for the next leg long to the upside. A couple of tech stocks, Adobe, nice breakout there. Again, it's got to stay out of the breakout level. Same thing as NVIDIA. Looking for that long tomorrow as well. NVIDIA's got a little bit more resistance here. So I think out of the two, I probably like Adobe, but I'm going to keep an eye on both of them. Amazon just been on fire. And if you notice, this is exactly the scenario that I want everybody to be aware of. There's a difference between buying this stop through this level, which obviously we've been talking about for about a week now. We waited for confirmation, which was a close outside of that level. We did not trade it on a buy stop to get through that level. And you can see what ended up happening. We waited for confirmation. It stayed there. And that's the nice move through there. Amazon long again tomorrow. As long as it's above the open, if you get long and it goes through and reverses, be super disciplined because this stock could move $200 very quickly. Apple, another tech stock that actually had a really good clean breakout. I have to be honest with you, this stock's been a little frustrating to trade on an intraday basis. You can see this kind of pullbacks that can really make you feel like it's starting to roll over after the gap. But it ended up finding a bid and getting through there again. And again, I just want to watch how the difference is on higher time frames. You can see how the profit taking opportunities just look a little bit cleaner. I do like Apple again long tomorrow, but I'm just not loving the way it's trading right now. But it's definitely going to be in my list. DocuSign was another one. This one is interesting too. Again, what did we talk about? Same exact thing we talked about in Apple. Let it get above this level. It's having a hard time. Failed. Finally closed above there. Closed in the top of the range versus this one. And got some nice follow through here now. So we have an inside candlestick, well bid. I'm looking for one more positive day out of DocuSign here, maybe two. Lilly is another one. You can see the breakout here. Lilly, we're talking about multi-year 52-week highs. I like this one as well. So looking for some follow through there. And DG, another one that hopefully we're keeping in our tracking journal. We pushed up, paused, and had a nice follow through. I will say this about DG. This is probably more of a swing trade stock than a day trading stock. You can see the melted candles here. That'll drive you a little bit crazy on the intraday price action. But here's what I want to talk about. And I mentioned this a few times already. A push and a pause. And this pause happened over the breakout level. So if we take a look here and just draw that line, I mean, that is about as textbook what you'd want to see for a breakout and a pause, holding the breakout and then making the next leg. That's a really good chart to print out and put in your folder there, right there. Next one I want to talk about is just a little bit crazy. Walmart is apparently looking like it's a good stock to trade, but it's all over the place. We get these nice clean breakouts and then we trade like garbage for a couple of days and then three candles in a row that closes near the high. So these 15-minute charts make you feel like very easy to trade, but it's really not. We're kind of exploding and closing near the highs, but most of the day has been super choppy. So don't get fooled by looking at these candlesticks unless you're swing trading. If you're swing trading and holding it, obviously these intraday timeframes don't matter as much. I want to talk about some sell shorts. Again, very hard to find some sell short opportunities. Looking at Discover Financial now, the hard part about a lot of these trades on the short side, and I want to point this out, this is not an A+ trade because it's really in a trading range. It's trading between here and here, and we're kind of like in the top third towards the bottom. You could make a case for shorting this because of this longer-term downtrend and it didn't break the uptrend. I just don't know if it's worth it because there isn't really any clean, we're going like this and, you know, and having this nice float back and forth because of this. And I want to point that out very clearly because somebody's going to write me and say, well, we made a lower high. And I'm like, yeah, we also made a higher low. So we really have more of a price action here where it's consolidating for a breakout in a bigger direction, but not really calling the direction. So what I'm basically saying is a lot of the short sales we were looking at, even if the market trades lower tomorrow, I'm not seeing some amazing opportunities. A couple that are going to be interesting are stocks that reported earnings today. And this stock is very similar, although this one is now actually well offered, cleanly well offered. JP Morgan out of the gate today was actually one of the stocks that I've called out twice. I called it out here in the breakout, it failed. And then today we had earnings this morning. Earnings, interestingly, the way it was interpreted was the company had poor guidance going forward, but the trading division did really well. So obviously the company news is where the selling came in. So if you see how it traded during the day today, looked awesome. Second, within 10 minutes, it looked like it was going to spike, but then we ended up getting an inside candlestick breakdown, and it just got crushed the rest of the day. So only other things I have on the short side here for possibility is Boeing. I'm looking for a little bit of follow through, and this is probably a better example of a stock consolidating where I'm anticipating a really big move out of this consolidation. You can see it just keeps getting tighter and tighter and tighter. So this is one you definitely want to have on your radar. I'm obviously a little bit more bearish, not quite the same where we're hanging out. The consolidation, if you know, the same thing as a one-day consolidation. I'm expecting a big move out of this one here. Interesting one I want to point out from a chart reading perspective, a tape reading perspective. This stock, Virgin Galactic, actually came up as met the criteria in a double normal volume. So you actually see we got double normal volume, but here's where it gets interesting, and this is another one to print out. I get a lot of questions about accumulation distribution. How do I see it on charts? When I pull up the volume for this chart, you're gonna definitely want to print it out. Look at the volume spike here during this whippy-toppy price action, and look at the volume here on this breakout. So this is distribution, which typically happens over a longer period of time, but I'm bringing this up because it's actually a very clean example of it. And then look at what I call a fuel candlestick, which is a high volume breakout, large volume candle out of a trading range. I want to see it hold the breakout tomorrow. It's got to stay above 18 before I look for it as a swing trade. Not really a great day trading stock, so I want to make it clear, but this is really more of a lesson to what to look at and for a stock chart to print out. And that's a good example there, where you can clearly see heavier volume started and maintained the uptrend, paused on much lighter volume, climactic volume, reversing it. And this is a big part of it too. It's sloppy, right? Sloppy, heavier volume usually is distribution because it's fooling the public into thinking it's active and it's going to keep going higher. And then we have energy candlestick here, which I call fuel when it breaks out of a trading range. Again, we just covered JP Morgan. I want to cover last two here. Caterpillar. I'm going to get the volume off of here. Caterpillar inside candlestick today after bearish candlestick, bearish gap lower, closing on the lows, followed by an inside candlestick. It did technically trade higher today, but inside candlestick consolidation. I'm going to be watching Caterpillar like a hawk tomorrow for a trend day. Big green or big red. Again, inside candlestick breakouts are a one-day strategy where you're looking for an expansion in volatility. And last but not least, we want to cover Chevron and Exxon. So we have an inside candlestick here in Exxon. So inside candlestick, inside of an inside candlestick. And then CVX inside candlestick as well. So make sure CVX and Exxon are on your list for tomorrow as well. We should get a nice expansion in volatility in CAT, Exxon, and Chevron. So some good stocks to follow through. Be careful about stocks that have been up 5, 6, 7 days in a row. If they open higher, the greater likelihood for profit taking there. Very hard to find awesome short sales. So you might have a dilemma tomorrow. If the market opens higher, we see some profit taking. What do? The smarter trader, your A-plus trade, is you don't want to be short selling strong stocks. Look for stocks that are weak, that you believe have room to go. Look for something on the weekly chart that's well offered. So at least you have a good argument there that stock is lower lows, lower highs for 2 weeks. And then ultimately you can look for short sales if the market starts to trade in a negative way. If it doesn't, stick to the long side. It's the better opportunities right now. So thank you so much for joining me today on today's Best Stock Picks. We just created a game plan for April 15th, which is a Wednesday, 2020. If you find these videos helpful, it would mean the world to me. Click down and subscribe. And if you have anything you want covered, absolutely leave a comment or some feedback. I'd appreciate it, and I'll get to those stocks in a future video. So have an awesome night, everybody. Be safe. That's the most important thing right now. Take care.